guys, welcome to another video. So in this video we're going to be talking about what not to do first when it comes to trading. I've been teaching for a little bit over 4 years, and I've realized after talking to hundreds of traders that there's just this one tiny mistake that the majority is making. And so I'm going to be showing you guys an example of a trade that I just caught and what the mistake is and how you can avoid this mistake so that you can take better trades. Now before we get into the video, tomorrow on YouTube and TradingView I will be live streaming. I'm going to go over 3 really great steps on how you can make trading price action a lot easier. So I'll be live at 12 o'clock p.m. Eastern Standard Time, so make sure you guys are there. Make sure you have pencil and paper. It will be a free live stream, so come and join me on tomorrow. Now, one of the biggest things that I see people do, one of the biggest mistakes, is they begin immediately plotting structure on their chart. Now, market structure can be anything from support and resistance or a trend line. It can even be an indicator or whatever you deem necessary for you to want to enter the trade. And they do it on whatever time frame feels good, right? And I say that that is one of the worst things that you can do. It's kind of like getting in your car and you're going nowhere. You have no sense of direction in mind. You have no final destination in mind. All you know is here's a car and you want to get in. So when it comes to getting on your price chart, first thing first is you need a valid time frame. Like, this is the time frame you're going to go to the most to identify your trend. The time frame has to come first. Now here's the reason why the time frame has to come first. The time frames do a lot of great things. They're actually telling you how often you need to show up to analyze the price chart. For example, the daily. Now, I like using the daily personally, only because it's a time frame that doesn't get too noisy. It's a time frame that doesn't move too fast. Like, every candlestick opens and closes within a 24-hour period, which means I don't need to be there for the full 24 hours to see what's going on the price chart for one day. And it also means that the higher the time frames go, the more candles I personally need to be able to see any type of movement. So I'm not coming to the same currency pair every day to try to trade it. So that leads me into your trading style. With me being a swing trader, or you being whatever type of trader you are, having the right time frames is very crucial. It's very essential. If you're a scalper and you're on the monthly time frame, you know, one monthly candlestick can hold hundreds of pips. You're in the market to only grab a tiny piece of those pips. The monthly time frame really probably wouldn't really suit you. But if you're a swing trader like me, the daily time frame is kind of like a bridge. It's a bridge to the higher time frames, the weekly and the monthly, and the bridge to just a couple time frames lower, the 4-hour or the 1-hour time frame for you. And so what I like to do is use the daily time frame as kind of like a starter point. And that's like the main key. Use one time frame as your starting point. What is the starting point that tells you I'm here, but I need to get here? I need to get to this destination. And if I can't get to that destination right now, what will it take to see how I can get to that destination? And so that leads me into the biggest mistake besides the time frame. So we're going to start here on AUD CAD. Now, one of the things that you're going to notice is that I am on the daily time frame. I have AUD CAD in the background 1D. That means that I'm on the daily. Each candlestick takes 24 hours to close. So that means that I don't have to be here trying to figure out every single candlestick of every single day, because that's always not important. And when it comes to the time frame, you understanding who you are and what you do, you got to understand when you need to show up. For me, on one currency pair alone, it could be once a week, sometimes twice a week, just depending on the market condition or the way the trend is moving. So we're just going to focus on the last few fluctuations. Now, talking about fluctuations, the trend fluctuates, like price fluctuates. Price goes up, it goes down. It's like a wave. It's going to go up, it's going to go down. It's going to go up, it's going to go down. Your job as a swing trader is not to figure out every single candlestick as price moves. Your job is to hold the position while price is moving. That's the biggest thing. First thing first, don't plot structure. Here's the reason why. Let's say you get on your chart. You're on a daily time frame. One of the inclinations that you have is to plot something. It's to just do something. And it could look like this if you're going to plot support and resistance, or maybe, like I said, you do a trend line or something, okay? For me, I would do my zones. But let's just say that this is how your chart would look. Now, your next goal is to say, oh, well, let me see if I can get a trade. Because a lot of people, once they plot something, they want to do something. Let's say that you see this candlestick here. Let's just say this is how price closed today. One of your inclinations could be to do an if or that analysis. So I'm going to add in another level here because this is how most people would look at this. They say, well, this is support and resistance. And now you have a lot of things going on your price charts. So now you start to say, well, if price goes here, then I'm going to sell. Or if it breaks here, it could go here and then I can sell. Or if it breaks my trend line and then it comes back and retests it, then I can buy. You start to go over so many scenarios in your head because now you have a lot of decisions to make. If you look at a GPS or if you look at a bridge, you have one decision to make, and that's to get from where you are to that final destination, or that's to enter the bridge and then exit the bridge. There is no if, ands, or but. Price has to be treated the same way when you're trading in the Forex market. So what I like to do and teach my clients who work with me one-on-one or within my group is have one trading decision, but know where price is first. So the first thing we do is we locate what the price is doing. One simple question: what is the trend? It's either up or down. If you say downtrend, you are correct. But now what you have to do is give evidence to the fact that price is in downtrend. Now you got to ask yourself, am I trying to make a selling decision right now? Are you? Would you? Even if this is a pair that you don't trade. Like, let's pretend this is Euro USD or Pound JPY or US 30. Doesn't mean you have a trade right now. Yes or no? One of the things that I find hard for traders is once they establish themselves as the buyer or the seller, they want to make an automatic decision. Sometimes it's not good to make an automatic decision because you could force a trade. So when you plot things like your support and resistance and your trend lines, you're gonna force yourself to be in trades. So we don't want to do that here. What we want to do is, once we say who we are, downtrend means to sell. Sellers have control. Show the evidence. So I'm just going to plot using my price note tool, and I'm going to change the color. Matter of fact, I color code my time frames, you guys. And color coding is very important. Like, template coding is important. And I may do a free live Zoom session over this within the next few weeks that to help you guys, set the tone for your time frames, because you don't want to clutter every single time frame. But one of the things that we do is we show evidence. So here is the evidence here. And I'm going to actually bar replay this so you guys can see what we did and why we did what we did before price got here. This is the evidence of price being in a downtrend. You guys notice how the chart is really clean. It's really free. It's simple. It's not cluttered. There's no lines. There's not even my estimation zones. My estimation zones never come first, okay? I'm understanding, I want to have a clear understanding of what I'm doing before I do it. It's like drawing or writing a draft to an essay. You need an outline. So this is like the outline here. Aussie dollar CAD, daily time frame. I have one lower high, two lower lows. It's all the information that's really needed for right now. Here's why. Price passed 0.89187. So I'll even bring it up a little bit. So we'll round it up, 0.8919. Then it dropped down to 0.8842. What does this mean? That establishes a lower low. This means I'm selling. Now, I'm not going to sell right now. The law of supply and demand is such a popular quote. You buy low, you sell high. That's it. So we're making a connection with what is going on with the Australians and the Canadians. So here's what I mean. Let's just say I lived in Canada, because we're trading the Australian dollar, Canada, right? Canadian dollar. So let's just say I live in Canada and I want to go to Australia. I cannot use my Canadian dollar in Australia. I need to convert the two prices, right? So I need to convert my money to their money. But what is the best price? As a consumer, as a customer, as a tourist, I may say, well, price was at 88 cents. Now it's at 90 cents, 0.90323. Let me go ahead and buy the Australian dollar with my money first. It's going to cost me 90 cents per their one Australian dollar. So now I'm buying it 10 cents cheaper per the dollar, on the dollar, okay? As a trader, I don't want to buy that information. I want to sell this information, okay? Because price is in a downtrend, which means in the future, price could be cheaper. Remember, we sell high. So what this means is we need to see price pull back, not go into an uptrend. That's not what this is. Now we're getting into cycles, but that's a whole other video. Okay. So now what we're doing is we're going to wait until price pulls back to a certain spot where we don't want price to go, because we established ourselves as the trader. And where you don't want price to go would just be back past the highest point of the market. The highest peak, which is at 0.91466, price just came from there. There is no reason we want price to get back there. What I see a lot of traders do is they begin to plot support and resistance, and whether it's at the high here, or whether it's connecting the high and the low here, right? Like there's a lot that is going on, and there's no right or wrong here. But the one thing you don't want to do is have your structure where you don't want price to go. And this is the biggest tip on how to become a better trend trader. Okay, don't plot the structure first. Know where you don't want price to go. And here we wouldn't want price to go past the lower high in the downtrend. In uptrend, you would not want price to go past the previous higher low. And so this helps dictate where you're going to set your zone or your trend line or whatever it is that you're going to be trading, okay? For me, I trade my estimation zone. So once I say where I don't want price to go, this is where now I'm going to start to plot things, and I only plot one thing. But this is why for you, if you are making this one mistake, if you are plotting structure first with no key direction in mind, you are going to lose a lot of trades, okay? So let's play the next candle forward. Price goes higher, but it hasn't passed 0.91466. Remember, this is where you don't want price to go. Would this frantic you? Like, would you get upset, or would you get nervous, or would you feel like you've missed a trade? Would you feel like you could have entered in earlier? Because now this is the point when traders start to shift time frames. They start to drop down in time frames and add extra things. And you know, if you had a zone here, let's really look at this. If you had a zone here, once again, let's say like you're the support and resistance trader, and you're saying that this is support, resistance, and all of this, and price passed it. And maybe if you had that trend line that was right here, what you might start to do is say, well, price broke it. Now I need to start to buy. I need to look for a retest and buy. And so if this is you and you're becoming frantic because of what you're plotting, you have to have a better understanding of price action, which is why, once again, I'm doing the free training tomorrow over how to make price action trading a lot easier, because there are rules to this thing, and it's not a lot. It's not a lot of rules. It's just the understanding of what price is and what it does, and how to identify it on your price chart before you do any of this. Okay, so let's say with the next candlestick, price drops and it declines. Now what do? Now this is when you're going back and you're like, okay, well, now I need to sell. Okay, and so maybe you start to look for extra rules. You say, well, I'm going to wait for a pullback and then I'm going to sell. So now you're probably dropping back down in time frames, or now here you're probably adding things once again. You're like, this is support. I'm gonna wait to see if it turns support again and push back up, or whatever the case that it is that you're doing. But I can guarantee most of you are doing something like this. And if this is you, that is fine, because all it takes now is just clarity in what it is that you're doing. Because once you become wayward, or you become lukewarm, or you're double-sided about what direction it is that you're going to trade, it could cause you to do things you don't want to do. For example, you could have dropped down in time frames and try to look for a buy. You could say this is a retest, now you're looking for a bullish candlestick. You could be doing any of those things, right? Let's continue to play this forward. So price does come back and it does retest, right? Or you could tell by this wick here. So maybe you're in the sale, I don't know. But let's continue it forward. So price gets back down here. Let's say you do have a zone here, and then you see this candlestick, right? But keep in mind what's going on. Price is still bearish. See, when me and my clients entered this trade, we didn't have any of this stuff on our chart. We literally had one zone. That's just one zone that was kind of around the same area as this zone here, okay? And we held the trade down to the previous low, and then a little bit lower for those who took two profits. Now, let's play it forward. The next candlestick is almost towards that low, and this is where a lot of us were taking out of our positions. Now, once again, we started from a clean slate. We had an outline. We didn't have anything blocking the flow of price as it was continuing down. And one of the reasons is because, once again, we don't want to be wayward when we're trading. We don't want too many things on our price charts when we're trading. But what we do first, and what we did first, was we established ourselves as the seller. What you want to do in a downtrend, establish yourself as the seller first. Because if you plot structure first, you're going to become wayward. But if you come first what you want to trade, it makes you have a sound trading decision. You just need one. I know there's a lot of people who are going to say you need to have two trading decisions, or you don't need to always trade in one direction. But isn't the market directional? Isn't what we do directional until it's time to change? Even in real life, don't we tend to go one way first until something forces us to go opposite? And that is the same way when it comes to trading. Because guess what? Now that price has dropped off more, this is where we are in the market. What do you think we're going to do next? We're going to update this dang on price chart. Don't take everything off, meaning your price note tools, but all we're going to do is just add one tool. We have a low. Now we have a lower high. Who are you now? Are you the buyer, or are you still the seller? And if you said seller first, that is right, because price just made a new low. We're still in the downtrend. Now you can plot to see where you want to enter the trade. Now you have permission to be the seller. Now all you're going to do is wait for price to pull back to where you want to enter, then you go for it. But because we're on the daily time frame, you know it's going to take some time for price to pull back so you can become the seller once again. I believe this is over a 180 pip winner. Really, really good trade. Okay, and these are the type of trades as a swing trader that you want to take. So moral of the story is, don't plot structure first, identify your trend first, and then go from there. So I pray you guys enjoyed this video. I'll see you in tomorrow's free training. Like the video, subscribe to the channel. You guys have a safe trading week.